The next item in the program of the first day of our conference will be a panel discussion on the outlook for growth and development in the European capital markets. And our panelists will include Iwona Sroka, President and CEO of the Central Securities Depository of Poland and KDPW CCP. Rafał Antczak, member of the Management Board, Deloitte Business Consulting. Julian Macedo, Head of Emerging Markets, ECM Barclays. Jakub Papierski, Vice President at PKO Bank Polski. Ken Robbins, Head of EMEA Equity Capital Markets, Citigroup Global Markets. Paweł, Rymarz, Managing Partner at Weil, Gotshal and Manges. And Paweł Tamborski, President and CEO of the Warsaw Stock Exchange. And the panel moderator will be Cieński, Central European Financial Observer, demosEUROPA. All the panelists are already taking their places at this stage. And let me also remind you that, of course, at the end of the discussion, the panelists will be available to answer any of your questions, as in the previous case.
Good afternoon.
Good afternoon.
Thanks very much for the introduction, and welcome to our panel. We're going to be talking about development prospects of European capital markets, and starting with sort of a broader European view, and then focusing, sort of drilling down a bit more specifically into the Polish situation. The Warsaw Stock Exchange is, the Poles here know this for sure, but the outsiders may not. It's one of the crucial institutions of Poland's transformation to a capitalist system. When the transformation started about a quarter century ago, the dissident Adam Michnik famously compared the creation of a communist system out of a capitalist one to taking an aquarium and turning it into fish soup. And that what the Poles were faced with in '89 was the recreation of an aquarium out of the fish soup of communism, and until the recreation was an enormous success, and until very recently, actually, in the president's office at the Warsaw Stock Exchange, there was an enormous fish tank filled with piranhas, which I'm told is now no longer in the president's office, but was certainly a sign of the healthy transformation of the Polish system. I'd like to, as I said, I'd like to start with a broader look at the situation in Europe, and my first question is for Iwona Sroka. How do you see the regulatory environment broadly on a European scale? The sort of the unification trends in the regulatory structure, and what kind of impact is that having on the situation here in Poland?
Mm-hmm. So, from the perspective of post-trading infrastructure, this is the main trend that will impose, that will cover all aspects and apply to all structures on the capital market, so including the post-trading and financial firms, and as well as organizers of trading and investment firms. So we can say that the key driver for European and global and local markets is the local economy. But nowadays, the European Union regulations are very important because they raise a competition. They demonopolized our environment. They also create a very new and completely new provision for our services. So that common regulatory will our aim to ensure safe operation and improve security to mitigate the risk, but they also are very important to stay as a recognized infrastructure in the European Union. For example, we have in that typical for the KDPW or the CCP regulations, there are CSDR, which is a regulation dedicated for central securities depository, and the EMEA regulation, which is dedicated for especially for central counterparty. If if the CCP or CSD will meet in the future or just met special requirements, could operate across the Europe. So it means that we will have a level playing field with other similar institutions in Europe, and we will have in the future compete by the level of fees, by the quality of the services, and of course by the local capital markets and the market economy. Because the main focus will be to attract more and more new market participants from not only Europe, but from the perspective from the global companies as well. So in my opinion, that new European regulation, this is the new trend, and we will have to fulfill that requirements in order to survive. For example, in that part of Europe, only our post-trading infrastructure fulfill that EMEA requirements, and we can offer not only for Polish but also for market participants for region the full quality of post-trading services, like trade repository I mentioned in my presentation, and lay agency and the qualified CCP. So that's why we have now over 170 companies also and participants from our region. But it is of course also cost, because if you want to implement all those regulations, you have to put a lot of attention for the changes in the company, not only from the point of view of corporate governance, but also you have to fulfill the capital requirements, procedures, mechanism. You have to develop also your IT solutions, which are compliant with those regulations. So from my point of view, we will have more and more similar conditions to operate and to cooperate in the European Union. There will be in the future trend for interoperability because of the same conditions and the same regulations, harmonization of regulations in European member states. Higher cost for infrastructure, but the lower cost for the market participants. So from my perspective, this is the main trends for the near future.
Great, thanks very much. I'd like to ask Paweł Tamborski, since you've taken over the stock exchange, there have been some fairly dramatic changes. The final shape of the government's changes to the second pillar pension system has come through. The impact, a lot of market participants were very worried about what the impact would be on the stock exchange, because it's been a main pillar of the stock exchange. It seems to have been less of a dramatic impact than people had feared. And as well, you've taken the decision not to continue with the merger talks with Vienna as well. So I'm just interested to get your vision of where you want to be taking the Warsaw Stock Exchange over the next few years.
Thank you very much for this question. Actually, I think that we decided to drop for a while a project called Vienna. We are still friends with our colleagues from CSEC, from Vienna, but our focus today is organic growth. So we realized that there are so many places with huge potential here when we are talking about Polish capital markets, so that we decided first to focus on the organic growth. But we don't exclude coming back to the idea of development via mergers or maybe acquisitions in the future. We'll see. But as I said before, organic growth, this is our main focus. But saying organic growth, saying Poland, Polish capital market, if we want to grow, we have to grow internationally as well. And this internalization of Warsaw Stock Exchange these days we understand as coming back to the market, coming back investors, saying, guys, we are back in the game actually now. Yeah, so we are back in the game for attracting new issuers to also from countries from our region and not only, to come to Warsaw, to be listed here, to raise capital using our Warsaw platform. The same for investors. We would like, and this is our aim, our task, we would like to find new pockets of potential demand, which are not yet present here in Warsaw. This is why we are putting together a very active marketing plan to go to financial centers of the world and to promote Polish capital market, Warsaw Stock Exchange as a platform of natural choice for issuers and investors who are looking for Central Eastern European exposures. You ask also about pension funds, actually. Of course, pension fund system was and still is a very important element of Polish capital market. Thanks to development of Polish pension funds, actually, we were able to develop quite nicely a relatively large industry, asset management, professional asset management industry in Poland. And what makes difference when you compare Poland, Warsaw Stock Exchange to other countries, actually. So we can offer access to more or less all type of emerging Europe investors, probably a lot of global emerging markets investors, but also, in addition to that, we have access to a very interesting pool of captive domestic capital, which is available because of pension funds and because of other type of asset management, including mutual funds as well. We know these days that this question mark, which was over our stock exchange for last few months, is now over. We understand how the system will work, how pension funds will behave. We are not talking about the same situation like it was, in the past, but we know that this system will be cash positive for foreseeable future. So there's nothing like fire sale coming from this part of Polish capital markets. So again, we are back in the game when we are talking about attracting new companies, new issuers, but also new investors to come and be active on Warsaw Stock Exchange as an international platform for the whole region.
So do you plan to be sort of touring the region, talking to companies and trying to get issuers into the Warsaw? And specifically, there had been a push in recent years to get Ukrainian companies to come to Warsaw, that this was their sort of closest, friendliest European capital market that they could easily access. What's the impact of the economic crisis in Ukraine plus the war? What impact has that had on your sort of Eastern strategy? Ukraine
is natural direction for Warsaw Stock Exchange. We have even our representative office there, and we don't want to close this. Actually, we are going there in November, if I could remember. So, we have 12 companies from Ukraine listed in Warsaw. We have Ukrainian index, which, as you can imagine, dropped by 40% in the recent times. I hope that when situation will stabilize, actually we will be able again to put these companies on the radar screens of investors, and that we will be able actually to attract new companies, new issuers from Ukraine to think about listing on our platform.
Great, thanks. We heard in Peter Oppenheimer's talk the Goldman Sachs broader view on the macro outlook. I'd like to ask Rafał Antczak if what his view is of the Polish economy over the next year or two, in light of the sort of slowdown that we're seeing in Western Europe and crisis east of Poland, how Poland looks like it's going to be faring.
We can say that in relative terms we look good, but everything is relative. And if you bring back to this comparison of converting soup into aquarium, we can say that we are in aquarium already, but this aquarium is pretty shallow, and there are not many so big fishes. plus the water is getting hot again. So this is more or less the situation, because Poland, as we like to compare from historical reason, eventually reached this medium level of development for the first time ever. We haven't reached such a level even in Jagiellonian times 500 years ago. However, this medium level of development, or one say a medium level trap, is a moment that actually limits room for mistakes. And we are the country that is actually still have these simple reserves of growth that from the one hand allows for some mistakes. On the other hand, the cost of these mistakes might be quite significant, and we are not mistake prone, because to bring you back recent history of forex options, it actually is quite a good proof that relatively simple and wise market game can undermine a significant amount of Polish companies and increasing costs tremendously. So we managed to go through. We are still paying the price for that. But the point is that paying such prices will not bring us through this medium level of development into the higher level of development. And in fact, we are one of the big 6 European countries already right now. But the gap between Poland and, for example, Spain or Italy is still huge, especially in terms of the capital. Because if you compare such maybe strange issue from the macro perspective, but domestic assets. You know the concept of assets from the microeconomic level, but there is also a concept from the macroeconomic level, and it takes into account all the assets available to the households, companies, and the state, netted out by net international reserves that in terms of Poland are negative, because we are, of course, borrowing money from the developed countries. We are ending in the situation of having roughly 3,000 euro per capita assets, comparing with, for example, 60,000 euro in Greece or 150,000 in Germany. And this is our situation. This is our status quo. So having in mind that this is kind of a level of development and growth oscillating around 3%, because this is probably maximum that we can reach from the economy without any further structural reforms, it is hard to believe that we can close the gap with these other developed big European countries in the 25-year perspective. Why 25? Because already 25 years has passed, and we are thinking from the perspective of 2 generations to close the gap. Would be extremely difficult to close this gap in this next generation. Therefore, from the perspective of capital market that is actually being squeezed by some global competition which Mrs. Sroka was talking about, because just to add one issue was not mentioned, transatlantic trade and investment partnership. This is actually the moment that would be also fierce competition between US and European Union countries, including Poland. And we have heard that the US economy is in a completely different trajectory than EU economies, including the Polish one. So the environment is less favorable for Poland. Uncertainty is relatively high. And I would say in Poland, we are missing something that was in the beginning of our transformation, some clear view of the developments, and we are, of course, talking about the developments in financial markets, that might be the drivers of growth. Because bringing us back again to the past, these clear developments in case of Poland were, of course, privatization and IPO that were bringing companies to the market. The second pillar, capital pension system, that is over. And plus also a quite conservative model of market regulations. All these factors reached its limits. So question is what might be the next fundamentals of the market growth for Poland, and of course for us, because we are the part of that market. I'm not that person in the moment right now to answer easily that question. This is just the moment that we probably need to define these drivers by, of course, ourselves. Because if not us, there would be external factors that would define by these factors, and we would have to just follow the herd. So following the herd is much sometimes more difficult than bringing in the front of the herd.
And just sticking to the macro side again, if I can just continue, over the last decade or so, Poland has averaged GDP growth of around 4%. It's now been around 3%. Do you see this as a longer-term trend? Is the potential growth rate simply slowing? And what are the kind of steps that you would like to see that would be able to push that closer to that 4% level, which significantly speeds up the catch-up process?
Intellectually, I have very much problem with the concept of a potential growth in a transition economy. And Poland still is partly transition economy. So building some comparisons of the past developments, like the average 4% growth and future of 3 or 2% growth, is just a kind of a statistical issue. The problem is that our past growth, as we know, of course, was based on the quite breakthrough reforms. Because if you look through the transformation in Poland and compare this transformation with other European or Central European countries, not to mention former Soviet Union countries, Poland was driven by reforms. The question is what might be the driver, or what might be the reforms for the next 25 years. And the answer from the economic perspective or the macroeconomic perspective, one answer is very simple. Every developed country is talking about the reform of the public sector. Starting from the budget and ending up in the efficiency of the public sector. This is what the global consulting companies like my company is talking about globally. Who is talking about in Poland about the public sector efficiency or the fiscal reforms, not on the revenue side, but on the expenditure side? Nobody. So the potential growth in Poland quite be still, I think, beyond the 3%. But under one assumption, that we'll launch the next stage of reforms and the public sector will be addressed.
I'm not sure what the odds of that are. I just finished doing a story for The Economist on the new Kopacz government, and every analyst and economist that I talked to basically bogged down and had no idea of what her priorities were and whether she was leaning left, leaning right, or a reformist or not a reformist, and what's going to happen in 2015 or 2016. So there was certainly an inability to come to any conclusion about how she's going to move over the next couple of years. I'd like to ask Julian Macedo what the international investor perception is, first of all, of Poland, and then more narrowly of the capital market here in Warsaw. Is it seen still as an emerging market? As it obviously the Polish aspiration is to be considered core European. I mean, has it reached that level yet?
I think the term emerging market is one that I'm embarrassed to apply to Poland. It is very much a developing, if not nearly developed market, which stands very well in comparison to the mainstream Europe. The development of the capital markets here is just one symptom of that. If we look at, by example, if we look at the market capitalization of the market, of the stock exchange to GDP in Poland, that is 38%. Compare that to what I term as more emerging markets, as Russia or Turkey, which stand at around 30% each. Poland's significantly ahead of that. And when you compare that to the true developed markets, Germany and France, Germany's at 52%, France at around 70%. Those compare extremely well. Certainly Warsaw and Poland has a way to go, but is well ahead of what one might term its peers.
Great. I'd like to ask Ken Robbins the same question: how Poland is seen compared to other emerging markets, and then more specifically the Warsaw Stock Exchange as developed, and where it sort of fits into investment strategies.
Sure. Look, I think from the perspective of international investors, Poland does get lumped, and I think, as Jeremy said, probably unfairly into an emerging market bucket, because international investors are generally benchmarking themselves to indices, and MISCI EM is a key indice for those investors in terms of benchmarking their performance. Nevertheless, I think within EM, particularly in Europe, Poland is very much seen as the safe haven, with a very strong regulatory framework and clearly a very successful and well-regulated stock exchange. And I think the other key benefit of Poland versus a number of other EM countries is that you have a strong domestic investor base, both institutional and retail. So if we look, for example, at Poland, it's probably only approximately 50% of investment in equities is international, but if you go to Turkey, it's 70%. If you go to Russia, it's more like 95%. And that gives investors a lot of confidence around liquidity and around a bid, particularly in the smaller companies. I think in terms of how investors are looking at Poland today, I think generally, clearly, as was articulated by Peter, we're in a very low growth environment in Europe, and rates are likely to stay lower for longer, probably lower for longer than anyone really anticipates, is our view at Citi. I think investors are feeling generally positive, nevertheless, on a relative basis around Poland. We've obviously just had a recent rate cut, which is generally seen to be positive, and particularly positive for exporters and potentially the resource sector. I think the reform of the pension sector has been better than anticipated 3 to 6 months ago, which has been another positive. The employment data has been solid, with decent employment growth. And consumer and corporate sector NPL ratios have been decreasing for the banks. The key concerns, we would say, would be around the macro slowdown still. Now, that's been prevalent across obviously the Western European economies, particularly France, Italy, and Germany. And I think investors continue to be focused on what's going on in the border with Ukraine and the potential impact of further sanctions on that region. But overall, I think on a relative basis, investors are feeling pretty good about Poland today. And I think that anyone considering new issuance in 2015 will get a good reception.
Great, thanks. My next question is for Jakub Papierski. First of all, what's your sense of how the risk perception of Poland has changed in light of what's happened in Ukraine? Is Poland being seen now as a potential frontline state, one where there is a geopolitical risk that a year ago simply didn't exist, and does that make investors warier of coming into here, or is that not really sort of percolated through into their perception that way?
When we speak to investors about either investments into PKO securities or any other securities that we trade to them, Ukraine is always a topic, but it's a secondary one. They usually tend to draw the attention to the fundamentals of Poland, Polish economy, how the European economy affects our own, but Ukraine doesn't seem to be very fundamentally affecting yet, and hopefully also in the future, the condition of the Polish businesses. I fully underwrite what Ken and the colleagues said about the change of perception of Poland and shift from the European market perception towards more developed countries. When PKO issued its own bonds back in 2010, we benchmarked ourselves to the banks from the very peripheral economies, and the Polish government was very, very far away from the German bonds. Now, when the sovereign Polish debt is sold, we are very tied to the German levels, and PKO itself is benchmarked against the best banks in the world. So from that perspective, we really went a very fast track in terms of improving perception of Poland, at least in the DCM space. So Ukraine is a topic, but it's a secondary one for the time being.
There's been some talk of sort of the liquidity provided by the structure of investors in the Warsaw Stock Exchange, but there's been a perennial problem with, over the last few years, at any rate, of the presence of retail investors, that they're not as large a presence as they should be on the Warsaw Stock Exchange, and as well that a lot of savings tends to be just depositors, traded banks, that the investment culture hasn't. I guess people got fairly badly burnt in the 90s with a couple of downturns. And is there any way to make the market more attractive for either Polish retail or Polish institutional investors to pull more of them into the WSE?
I think it's not about attractiveness of the market infrastructure or anything else other than just the fact that mutual funds are far more easier to follow for the normal poll, like any other individual in any other country, than direct investment of that individual using a direct purchase and sale of the securities on the stock exchange. Of course, there is a still very significant segment of the retail investors in Poland that account for between 13 and 15% of the trades nowadays. It's very much put through the electronic channels, because the internet accounts for some 75–80% of the trades from retail investors. So I believe it will be that level or even more, smelting down to one digit in the, say, 5 to 10 years horizon, because it's simply far easier to get exposed to the equity returns through mutual funds. And I believe also, given the fact that banks are dominating the distribution channels of the mutual fund products, i.e. the investment product that usually individual investor buys, it will be exactly that product that will be dominating potential shift of savings from the plain vanilla deposits or bonds towards the equity-linked returns. We nowadays have some 530, 540 billion of deposits in the Polish banking system from retail clients, and another 200 in the mutual funds. So if we can imagine that shift of only 10% of that plain vanilla deposit would happen, we would talk about growing of mutual fund component by 25%, by 50 billion Polish zloty. So it's a very significant increase. I doubt it happened very fast. It will be a gradual process. Also, certain adjustments into the pricing strategies and product mix strategies must take place in the mutual fund businesses. If you compare current rate of returns of the fixed income instruments that are between 2.5% and 3.5%, and management fees that are charged by the majority on the market, they are fairly comparable. So it cannot last for long that majority of return is eaten up by the management fees. So I expect some fee smelting.
And is the potential or hope for shift of some of these savings assets into mutual funds, is that being driven by the banks, or is that being driven on the demand side by the savers themselves?
I believe this will be driven by the good investment proposals. It won't be driven by the mis-selling processes like, say, 10, 15 years ago in some countries. So this is something that would contribute to one of the questions, what to do next with the stock exchange and what to focus on. My very simple recipe would be to simply get back to the roots and try to search for medium-sized and bigger sized companies that would come to the floor to finance their growth rather than to sell the stakes, and in that way to wake up the appetite and interest of the retail investors to be active on the stock exchange.
Great, thanks. And I'd like to ask Paweł Rymarz more of I guess, an infrastructure question. What's the best sort of model for the Warsaw Stock Exchange? One that relies much more on local brokerages, or one that has a larger presence for global investment banks on the WSE?
It's difficult to say, but I can't imagine a good infrastructure to be in place without any of this element. And the practice shows that both work very closely together. The most successful offerings in this country were typically run jointly. So just it should be as it is, simply more.
And there'd been a little talk earlier of sort of the drivers of how the capital market should develop in the future. What for you are some of the more important elements that should be looked at to continue developing the WSE over the next few years?
You know, I'm just a lawyer, so by definition I have quite narrow view on this issue. You know, England made English law one of its export hits, and bestsellers. We don't have this chance, but why don't we use our law to promote import of issuers? The securities law was designed to protect investors. Yet there are no capital markets without issuers. There will be no one to protect. We focus heavily as a lawyers or legal system, therefore, is focused on protection of investors, while stock exchange is designed to protect, promote, attract issuers. I think that we can improve in Poland cooperation between those two, between stock exchange and our regulator. We could and should look for more balanced approach, investors versus issuers. It shouldn't be the case that some Polish businesses are creating holding companies in Holland or Luxembourg simply because it's easier to get prospectus approved in those jurisdictions and then passport them back to Poland. It doesn't make sense. It's Polish business, Polish investors, and only foreign regulator. I think that the best move to start with is to invite to panel like this one, someone from Securities and Exchange Commission of Polish FSA, who should take my place here, and jointly with business people, jointly with Paweł Tamborski, work on what Mr. Antczak phrased very well as public sector efficiency. We can start with efficiency in financial supervision sector.
When you talk to your clients, are there particular areas that they have problems with in the Polish regulatory structure that drives them out of the country?
Not many. Not many. I am in good faith. I promote legal environment here as friendly, but there are issues which we simply didn't think of yet. We should probably improve the system for the benefit of issuers who seek multiple listings, because our system is not made for this. Someone listed in Poland may find himself or herself actually trapped in the system which is not designed as secondary listing. Okay, we are an important financial hub. We are not London yet, though. So we should probably be more modest in this. Basically, the main issue is just time and efficiency of process. This could and should be improved, and typically improving legal system is one of the investment of the nicest rate of returns. It doesn't cost much, but it immediately brings effect.
Great, thanks. Iwona, Sroka, first of all, do you have any reaction to that? And then secondly, what are some of the areas that could be made to function better, that could make Poland a more attractive place for listing?
I fully agree with Paweł Rymarz, because as I mentioned at the beginning, we will have the same level of regulation, the harmonization of regulation across the European Union member states. But we will still have local FSAs, local financial security authorities, and local currencies in some countries, local central banks, which also influences on the central bank also influences on the financial sector. So that's why, in order not to have a so-called FSA arbitrage or regulation arbitrage, we have to cooperate together, not only the stock exchange, depository, CSD and financial firms, but also with Financial Securities Authority, to develop capital markets in order not to have a higher level of arbitrage. So that's why we have to create not only one entry point for and then the full scope of financial services for Polish, for local and for foreign companies, but also the higher level of our services. For example, we started to develop in the capital group of KDPW services for banks, for OTC derivatives, in order to offer such a kind of services for Polish banks. And during our talks with financial institutions from London, that global ones, they said, okay, you have a kind of resources on your own market, so start clear transactions in Polish zloty on your local market, then we will join you. Try to create an economy of scale on your local level. And I can understand it, so we still have a potential for growth and potential for development. Let's use it, and then outside demand and supply will join us.
All right, thanks. I'd like to ask Paweł Tamborski, there's been a lot of talk of attracting listings, and when I covered the region for the Financial Times, I would talk to a lot of incredibly interesting Polish companies that have sprung up over the last quarter century and grown to a significant size. But what's also striking is that an awful lot of those companies are not listed on the WSE. They finance themselves, they go through banks, they've got other ways of accessing capital. They don't come to the stock exchange. Why is that? And what can you do to change that perception among some of the most successful Polish companies?
Actually, I think that, of course, there are plenty of companies, and I see this as upside potential, actually. Yeah? Plenty of companies which are not listed yet, and I think that after 25 years of development of the free economy in this country, probably some of them, especially family businesses, large enough actually to think about capital market potentially, they're approaching the moment of some kind of change of generation change. Yeah, so and parents sometimes have to decide actually what next. Yeah, so are kids ready to take responsibility, or maybe public capital market could be the solution for them. I think that again, I see huge upside, because there's still a long list of potential issuers to be attracted by capital market. But I think that we were relatively successful so far. Of course, development of capital markets here, development of Warsaw Stock Exchange was driven by privatization. It was some kind of milestone, the first stone. But we were successful in development of something which I call for myself, capital market culture. So Polish capital markets in this country, public market is some kind of natural way for Polish entrepreneurs, for Polish companies to think about monetization of their assets, or it's natural place for raising financing for their needs as well. Actually, even when you talk to private entrepreneurs, they see the fact of being listed as some kind of personal achievements in their business CV. But of course, there are plenty of companies which are still not our clients. Paweł mentioned why not to promote Polish legal system actually as friendly for importing issuers. But I think that there are probably, we could put together lists of promotions. Autumn promotion, for example, we should put on this list for sure potentially some benefits for companies which are listed because they are good taxpayers, for example. We should put on this list some measures to attract more individual investors actually to be again active directly or indirectly on the capital market, because we have to think how to convert this savings of households actually, which was mentioned by the amounts were mentioned by Kuba and colleagues. I think that it's in interest of this country and interest of the Polish economy actually to convert this deposit into the, let's say, instruments which will be more active in pushing our economy on a higher level. So I think that we can put together the whole list of autumn promotions, which actually could be important for development of the capital market in our country.
As you said, the privatization has been a main driver of the stock exchange, basically for the whole of the stock exchange's existence. Now that the Treasury Ministry's privatization program is coming to an end, and there's fewer large IPOs in the offing, there's simply fewer large companies left to sell, and those that are still existing under government control are probably not going to be IPO'd. So what is going to be the driver in the future then? I mean, is it going to be these domestic companies that we've just been talking about? Is it going to be trying to get foreign listings from the region, or from a more broad European market to come to Warsaw?
Our natural niche is, of course, Central Eastern Europe. Yeah? So answer for this question is, of course, Polish and companies from our region. Again, we would like to be, the market of the natural choice for companies from our region. My main problem is, for example, that Polish vodka, actually, company which produces Polish vodka is listed in London, actually. Yeah? Which is good, actually. Manchester United is listed in New York, so they have also some lack of success on this field as well. Yeah. So I think that the development of this culture of capital market culture and this focused list of promotions, which should actually help us and make our life easier to focus on business arbitrage rather than regulatory arbitrage. These are the factors which will be, of course, helpful for us.
Great, thanks very much. I'd like to ask Julian, when it comes to the perception of Warsaw as an investment venue, do you get a sense that that companies in the region and more broadly in Europe are interested in listing in Warsaw, or is there what are the barriers that would hinder them from doing something like that?
And when we speak to potential issuers across Eastern Europe, it is surprising how often Warsaw is one of those options that we discuss. And Paweł and his predecessor teams have done a great job in marketing Warsaw to Eastern European countries. When we look at the issuance over the last few years from Eastern Europe, it is notable, though, that Warsaw has been by far the most dominant factor there in Eastern Europe, ex-Russia. When I would say that there was one particular example of an issuer, not geographically within Eastern Europe, but perhaps culturally, which was publicly looking at Warsaw over the last 2 years. Ultimately, they decided to list in London, but Warsaw was very much a viable alternative for them. And I'd encourage Paweł and his team to carry on marketing themselves across the region. I think that that is complemented by a strong domestic pipeline. If we look at the issuance amongst Warsaw from Polish companies on the stock exchange this year, there have actually been 14 separate issues on Warsaw, and that's in a context of where there have only been 22 capital markets deals as a whole across CEE, and that's including Russia. So that's actually an extremely vibrant domestic market, let alone a regional one. Now, looking forward, the challenge is very much where does that new pipeline come? The privatization program, as you say, is coming to an end. There are, I think, identifying those future standard bearers of the market is something myself and my colleagues across ECM are very focused on. When we look at those 14 deals that were printed this year, only 5 of those were over $100 million. And size is important to international investors, size and liquidity.
That's sort of been the perennial problem of Warsaw, that it has huge numbers of IPOs and has had for years, and it's one of the European leaders in that. But then the scale of most of these companies is relatively small. And I've talked to some of these issuers in past years who complain that they come onto the WSE and then they have liquidity issues. There simply is not nearly enough trading in their stock, and they end up being relatively disappointed with their presence here. Do you see that as well? I mean, is that something that you've run into?
It certainly is, and when we are advising companies on how to access international investors in particular, size of the offering becomes quite a big factor. You know, the $100 million limit that I mentioned earlier is in some ways quite important for investors. They also want liquidity in the aftermarket. But that said, that this is not just an international market, this is also a very domestic market. With a strong local investors, by way of parallel in the UK, has an extremely vibrant small and mid-cap investor universe, all extremely domestic, but one that looks at and drives that mid-cap market, which has been one of the best performing sectors in the UK market over the past few years. I think some of the incentives around tax incentives that Paweł mentioned are interesting. They have parallels elsewhere, both for issuers and for investors. The last comment I'd make is that I would anticipate the reform of the pension system here has elevated in retail investors' eyes in particular the prominence of the equity capital markets, and I hope prompted a debate as to where they should in fact invest their money in the long term.
Great, thanks. Jakub Papierski, we've talked a bit about the issue of getting Polish companies to become interested in listing on the stock exchange, especially some of the larger, more successful ones. Is that something you run into as well? I mean, do you and what are the kinds of fears or breaks that they have in not deciding to list?
There is lack of knowledge about what capital market can deliver to the company or to the shareholder of the company itself, because most of the perception of what capital market is biased towards an investor rather than the issuer, and that dominates perception and adequacy of the capital market instruments to the issuers itself. So there is a lot of work that must be conducted by the stock exchange itself and the banks, and the investment banks as well, in communicating how to use equity raising, how to use debt issuance to improve and boost the growth of the companies.
So are companies simply unaware of this, or are they worried about the legal and regulatory tangles that they'll get into by listing, and so they prefer to not go that way at all?
At the end of the day, those are also individuals, and their education sometimes in financial world is not very sophisticated. Therefore, they receive the message from media, which is very much biased towards retail investor, i.e. sometimes things go up, sometimes things go down, and they simply receive gloomy and unclear picture what the capital market can deliver, how they can benefit from being listed. And therefore there must be tailor-made, specially crafted information presented to them in order to be conscious how they can utilize stock exchange, how they can utilize bonds, how they can utilize IPO to boost the growth.
Great, thanks. Rafał, do you see that as well? That
as an example, I went to see some of my clients in south of Poland 2 weeks ago, and I brought 2 fresh mandates to IPO next year from the clients totally unaware of that they are IPO ready. So this is a tangible opinion that I present.
Do you see that as well, that there's a lack of knowledge, and what are the kinds of things that need to be done to make the prospect of listing something more attractive, something that once a company reaches a certain size becomes sort of a natural development for it to undertake?
Following actually on what Jakub said, I would like to mention 2 additional factors that companies actually have roughly 200 billion deposits, Polish companies, in the banking sector. And for obvious reasons, I personally would prefer if these companies were invest these assets, purchasing in slowly but surely Western companies through or with the instruments of the Warsaw Stock Exchange that might be the driver of a new flow of IPOs, contrary to rather, I would say, stage of development of Poland doesn't bring us to be a country exporting savings. So in terms of the country having not significant assets, as I had mentioned already, and purchasing by households assets abroad is, from the economic point of view, export of savings. So this export of savings, of course, to some extent is the export of savings of the companies. But companies, for example, purchasing abroad and bringing this listing to the Warsaw Stock Exchange might be a little bit different factor influencing development of the Warsaw Stock Exchange than just a pure IPOs of foreign companies with the use of household savings. So I would prefer the first one. I mean, Polish companies going abroad, using these assets, bringing them back to Warsaw Stock Exchange to be listed. And the second factor, which is also unique to the Warsaw Stock Exchange, is that we have a stock market and the commodity market under one roof. It's rather unique in a sense that many stock exchanges abroad are very much willing to combine with the commodities market, but these markets, actually two of these exchanges are in a competitive positions. In Poland, it was managed to establish such a structure, so I'm very much in favor of deepening the commodity market in Poland with the, of course, development of this market in a regulated format, because I think that this is even more back to the basics of exchanges, but that process was 200 years ago happening in developed economies, and in Poland still is to some extent missing. So I agree that we have still some potential of growth in Poland within the domestic market, but has to be developed much more smartly.
And what's your view on how the exchange is developing the debt market, which is still it's still fairly small? Is that something that also could become more attractive?
That's actually a phenomena that did not happen in Poland, but happened in Hungary, for example, from the very beginning of establishment of stock exchanges. So I know that the board, Warsaw Stock Exchange Board, is looking into that direction, the debt market. I would like to happen that, but the question is, of course, about this mostly regulatory environment, because this market is developing and is growing, but this is to some to significant extent OTC market. So this is more about what we said, regulatory environment favorable for listings. So this is something that could be done, but the public sector efficiency, when I said that, is the key issue.
Moment.
Yeah, please.
There is another last chance driver for the Polish capital market. We have to remember that about 12–13% of the Warsaw Stock Exchange capitalization, still those shares belong to the state treasury. So I think that there is also a last chance potential for growth. Thank you.
Yeah, but I guess that we get, for some of these companies, you end up with political issues of the Treasury losing control of companies, which creates problems. Go ahead.
If you don't mind, I would like to come back to Rafał's and your question about the debt capital markets, because I believe that the regulation in itself to list is one hand, but regulation as a stimulus to grow in that segment is the other angle, because financial markets undergo significant change in regulation about how to fund the banks and how to capitalize the banks. And those regulations will also in Poland have a significant impact about banks as an issuers and banks as promoters of their clients being issuers within the debt capital space. I believe that promoted leverage ratio that is supposed to replace the typical risk-weighted assets models of capital adequacy is one factor, and the other factor is the changed law of covered bond issuance in Poland that is supposed to deliver already next year the first issues of mortgage-backed securities to the Polish market. That's very fundamental change, opening the completely new asset class.
Paweł, Rymarz, do you have a view on these legal and regulatory changes when it comes to?
I can only welcome them. It's just step right direction.
Great. I'd like to ask Ken. we're talking about a market, the Warsaw Stock Exchange, which is the largest in the region, but is still in global and in European terms quite a small market. How do you see the future development of smaller national exchanges in an era where you have the larger exchanges are amalgamating, and you're creating ever larger global players, and you have these small, fairly peripheral markets. How does that work, and what sort of future do you see for a market like Warsaw?
Well, I think that, as been commented, I think investors are looking for liquidity in markets, and they're looking for markets with a high standard of corporate governance and strong regulation, and they're looking for the exchange to provide that liquidity and that framework. And you're right to say that there's been consolidation around a number of exchanges, and we've got, obviously, in terms of when issuers look to where to list, they have, for a European issuer, has obviously the US, has London, has Euronext, has Deutsche Börse, has Warsaw, etc. So I think what's important is that, aside from those comments I just made, is that you have a raison d'etre, and you have a niche, and you have a domestic investor base. And I think you have those three ticks in the box here, and it's just important to continue to develop that and to market that to potential issuers out of the region. Because I think when most companies, and I think most investors, start from a position of being relatively listing agnostic, and then try and determine what's best for them from the perspective of attracting investors into their equity story. And that comes very much down to what that particular exchange has to offer.
But do you think that a niche national exchange like Warsaw's can continue being an independent player, or at some point is it going to have to become part of a larger family, just as for the liquidity issues that you mentioned?
I think certainly for the medium term, yes. I think longer term is perhaps a little bit more unpredictable. But we don't, as I said, we don't see any particular issues. In fact, we see a lot of advantages to companies from the region listing on the Warsaw Stock Exchange, and investors have a high degree of confidence currently around that framework.
Great, thanks. Paweł Tamborski, I know that in the past, liquidity has been an issue, especially for sort of medium-sized listings. What steps are you taking to encourage greater liquidity?
Probably $1 million question, I think. Yeah. So I'm looking at my guys actually sitting here. Yeah. It's the job of Greg Zawada actually to deliver answer for this. Actually, what we do, actually, again, we are looking for new pockets of demand. Yeah, so we are looking for new investors. We are looking for new market participants who can bring liquidity to our markets. Like, there are groups of market participants who are not really present yet in Warsaw Stock Exchange, like the companies who do prop trading, for example, and active investors who could be able actually to provide some additional liquidity. We are as well in discussion with our brokerage industry here, actually how to support the concept of proper research coverage as well, actually, because we have top 30 companies or top 50 companies, which probably top 30 for sure, top 50, they're approaching this level that they are well covered by research. So they are, investors have access as well to this type of information. Our job, our aim is actually to increase this number of companies which will be properly covered by investment banks, by research analysts.
And is it easier to press local brokerages to do that, or larger European outfits? Are these companies simply too small for the bigger European companies to devote the energy and the resources to doing proper research coverage of them? Actually,
here I think that, of course, it's a natural way to talk to Polish brokers, actually, to companies which have origin here on the ground, and this is as well in the interest of the industry, actually, to make this market more lively. And on one hand, on the other hand, without Polish brokers, will be probably not. It will be much more difficult actually to find these issuers. As Kuba said, there are plenty of them still available. Maybe not big enough actually to be part of VIC20, for example, but for sure, companies who could be part of VIC100, for example. Yeah? And this is why we need actually Polish brokers as well. Yeah? When we are talking about international big investment banks, Polish administration use the concept of partnership actually. Yeah? So if you want to be our partners, Polish administration partners in execution of the transactions originated and executed by Polish administration on both sides, you have to treat Poland seriously. Seriously means, country coverage, companies coverage, sales, and trading actually. So these are here are the points when we are talking about treating this market seriously. And if you treat the market seriously, so you can count on being potentially part of future transaction on the execution side. Yeah.
But is that going to be an issue as the number of treasury IPOs and treasury actions on the stock exchange start to shrink? Is that going to be more difficult to either entice new investment banks or to keep the ones already here because they simply will have less need to be in the government's good graces?
Yeah, I think you are right. But on the other hand, we have still to remember that state will be active. Yeah? Will be active on both, on equity and debt side. Polish state will still finance the development house. Polish EBRD by selling still potentially blocks of companies which are already listed. So state will be active on the lower scale, of course, but still will be active. Yeah. And in the end, of course, we hope that when we are talking especially about these top companies, are big enough actually to be on the radar screens of big investment banks, and we have to use this opportunity and to do some kind of cross-selling actually. Yeah? So by promoting large Polish caps in the combination with exciting, fast developing companies which are maybe not yet big enough actually to think about international markets.
Yeah, thanks. And I'm assuming this is sort of below the radar of most of the people here, but the New Connect exchange was an interesting initiative of the Warsaw Stock Exchange. My understanding is that you're bringing in some changes into that. So I'm just wondering what your vision for that alternative market is and how it fits more broadly with where you want the WC to go.
Actually, New Connect is a very important segment for us. We call them among us actually kindergarten actually of the main floor. Today this market has market cap of close to $3 billion. We have more than 400 companies listed there. To be honest, some of them shouldn't be there, because of the size and maybe approach of owners, managers vis-a-vis capital market. But there are at least 100 of cases which are great successes actually. Yeah? So significant growth when we are talking about the business itself, significant returns when we are talking about the share price, and really exciting stories. Few of them already approached and changed actually. They moved themselves from New Connect to the main floor. So for sure we will promote New Connect as the place for new fast-growing companies. For sure we have to take care about quality as well. Yeah? So to avoid situations which could damage the public perception of this. Which
was an issue about a year or two ago. There were some quality problems. Yeah.
There are constantly problems, yeah. But we are talking about relatively small number of cases vis-a-vis this list of 100 companies which were really successful. Yeah? So this is but no mercy here. Yeah? So we have to be really careful and committed to when we are talking about improving of the standards on this market.
Great. I see that we're running to a close on our time, and my understanding is that there's a short period for a coffee break. I'd like to thank all the panelists for their very interesting views on the current state and the future direction of the Warsaw Stock Exchange and the broader European capital markets environment. Thank you very much.
Thank you very much for this interesting discussion that should give us a good deal of positive energy. Ladies and gentlemen, as it was mentioned, now I would like to invite you for a 30-minute coffee break, and the coffee is available, and coffee and tea is available just behind you in the main hall of the Stock Exchange Center. And can I please ask you to be back punctually for our next panel, which will be starting at 3:45. Thank you very much. We've just finished the first part of our today's conference.